Hi, Kelly Fitzmaurice here with the K Grant Group.
And I'm Hannah Canaletti with the K Grant Group.
And we are here to talk about our bi-weekly market update with you all.
Yes, I'm so sorry that we missed a week, but we are back in action, ladies and gentlemen.
Yes, we are.
We are going to start off by talking a little bit about where we were versus where we're going. So it's called a heat map. So this is about contract ratios throughout the valley. So you can see for a little while there in December, it was a little chilly.
It was a little chilly, and that's what we were dipping down into buyer's markets.
Yes, for a hot minute, or I guess a cold minute, we were in a baby buyer market, but this is where we're at as of March. So we're just going to flip back and forth so you can kind of see back to back. So things had really started to cool off across the valley, and now things are truly heating back up in a way that we hoped it would. So
yeah. And as previously mentioned, we always call after we hit the first of the year, we call it selling season, and we are in the thick of selling season, which is why we missed 1 week giving you a market update because we were really busy out there showing properties, listing properties. So you can see all these different areas that have already flipped into a seller's market. And I think our next slide is actually going to list the cities.
So this will tell you, so of our 17 major cities in the Phoenix metro area, 12 of them are considered seller markets. We have 2 balanced markets and only a few buyer markets hanging on for dear life. So you can kind of see that Chandler has really bumped up 21% in the last month. So, and that's as far as contract ratios and things like that. So huge for Chandler.
And something to bring up about these where we're in a balanced market, or even like Queen Creek, Maricopa, and Buckeye. When you look at our city and where the builders are building, those are going to be in those outskirt areas. There's a lot of building going on. So that's what's making it still a strong buyer's market. There's a lot of builders that are offloading their spec homes. And so we're just seeing that. And so that's what's going on. Those are all on the outskirts. When we're looking up here, this is all in the greater Phoenix area that's already been built out.
Yeah, it's a good point. There's a lot of newer homes and more competition, more quick move-ins, that sort of thing with brand new homes. So it's a great point to make. The other thing we wanted to talk about was inventory. So this will give you a good idea. It's very faint up here in the corner, but when people want to talk about market crashes, that's obviously a big topic of conversation always. So this very faint number up here, I don't know if you guys can see it, but in 2008, we were at 47,000 active listings roughly. Right now, we are actually sitting right at around 15,500 active listings, with coming soon included just over 16,000. And that's actually down 16.5% from this time last year. So March of last year, we were sitting closer to about 20,000 active listings.
Yes, absolutely. So when you're hearing that the market's crashing, the inventory and the statistics and the numbers just do not support it. We have, with the coming soon, as Hannah was saying, with the coming soon and what we have active, that's actually lower than what we had in March of last year versus back in 2008, 47,000 listings. And it brings up another interesting point, because back in 2008, the builders were overbuilding. They are not overbuilding right now. If anything, they're kind of underbuilding. Building permits have actually went down.
Yeah. And it's interesting because when you think about the lack of inventory or a below normal inventory for the year, it starts to put less pressure on prices. So we're already seeing the effects of that. You can see in this slide that price reductions have dropped dramatically since kind of when people started to panic towards the end of last year, fourth quarter, October into December. We had a little pop up at the beginning of the year, and they've really kind of tapered off. So we're not seeing these drastic price reductions. We're not seeing that much downward pressure on prices.
Absolutely, we are not. Right now, sellers, they'll stay at the price point they need to stay at. They still have quite a bit of equity into their properties, and they're just not going to fire sell their properties because there's no need, because of the amount of equity they have in them.
And the other option too, I'm going to move on to the next slide, but you can see that typically price reductions peak in February and March. They kind of come to a head in February and March, but we're not seeing that this year. We're actually seeing price reduction counts have declined this time of year. And the interesting part about that is that, like Kelly was saying, sellers don't necessarily have to sell. And I think a lot of what's happening too with interest rates where they are is sellers are still offering concessions to buy down interest rates, but they're compensating for it at a higher price. So if you want those concessions to buy down your rate, now you're having to come in a lot closer to list, if not slightly above list, to kind of counterbalance those concessions.
Yes, sellers will even put in their public remarks in the MLS that they will do a buy down of rate, whether that's for 10,000 or 12,000. So we are seeing that, but the prices, we're just not seeing the price reductions like we were.
Absolutely. And then days on market. So this is a big one.
Really big.
Yeah, homes that you can see in December. Homes on average, the median days on market in December was about 56 days. So we really went from, and you can kind of see here in May, we went from basically it comes on the market on a Friday, it's gone by Monday, to it started ticking up and up and up to about 56 days. We're back down to 32 days. So roughly 1 month on the market is about the median right now.
You know, and that does feel a lot closer to what the balance market of 2015 and even 2016, if you look at the seasonality. And it actually, it's really great because then we get to, if we have a listing, we get to host the open houses, really let the buyers kind of come through, think about if they want to purchase the property. It's just more balanced than what we've seen in a long time.
It's not a mad dash. It's not in May. I mean, that was an absolute frenzy. It's not normal. It's not, it's a crazy market. And now we're kind of seeing much more balance. And I think 32 days is a great median. And the other thing we've kind of noticed is, which I kind of touched on just a little bit, but we are seeing a slight uptick in sales over asking price again. So I think we can attribute some of that to the lack of inventory and the higher demand, but also people are asking for concessions to buy down their rates. So they're coming in above asking and then asking for that credit back to buy down their rate.
Well, which makes sense because it's all about that monthly payment for the client, for the buyer. And if they can get the rate buy down, they may go a little bit higher in price because it's going to keep that monthly payment affordable.
Absolutely. Especially if they could do something like a 3-2-1 buy down, which is pricier, but for the first year, your rate will be down by a full 3%, which is huge for a buyer.
And let's talk about what's going on with FHAs too, right?
Yes. Yeah. I don't know if that's on our next slide, but we'll touch on FHA quickly. But the mortgage insurance has come down for FHA financing.
Yes. Quite a bit. There's quite a few programs out there that are new that are going on. And if you guys want more information, get a hold of us because we can get you in touch with our lenders.
Yes, absolutely. So one of the last slides we wanted to talk about was the appreciation. So we saw this huge peak in pricing, obviously, for the sales price per square foot. And that kind of came to an absolute peak in May. And then it really did start to trail off. But when we talk about the bottom being in December, you can really see it here. So the price per square foot truly did hit a bottom point in December and has started to kind of work its way back up.
Yeah. So, but once again, we were going through that frenzy period last season that tapered off in May. So we're going to continue to see that until we get out of May. And you're going to see those headlines in the news that the housing market's dropping, it's falling. We're just getting back into what's in line and what's in balance before we went into that crazy period last year that started kind of in December and went all the way through May.
And I think when it comes to talking about prices dropping, like we've seen it already from peak to trough. We've seen it. We saw that roughly 12% in price reductions per square foot. And that happened. We've seen it and it's kind of working its way back up. But that's when people talk about it continuing to collapse downward. The data just really doesn't support those numbers at this time. So.
Absolutely does not.
So yeah, so I think that's kind of the most of our presentation. We're shifting back into hopefully some promise in the market and people are feeling a little bit more confident. Like we mentioned, for buyers, there are still sellers offering rate buy downs. So don't be discouraged by interest rates. And then any finishing thoughts on this, Kelly?
And if you're wanting to know about some of these new loan programs that are going on, or if you have questions about what a rate buy down looks like, how to get into the market, if you want to know more per city, this is just kind of a global view of the greater Phoenix. So just get a hold of us. We're here to answer questions and we want to make sure that we stay in front of you with our market updates.
Awesome. Well, thank you guys for tuning in and we'll see you in a couple weeks.